Welcome to P&L, Priorities and Lifestyle, with your host, Rob Schultz. Rob is the founder and president of Schultz Wealth. All opinions expressed by Rob and his guest are solely their own opinions and do not reflect the opinions of Schultz Wealth. This podcast is for informational purposes only and should not be relied upon for investment decisions. Please refer to our website for more information.
Hello, everybody. Welcome to P&L, Priorities and Lifestyle. I am your host, Rob Schultz, and today, I'm really excited about today. We're actually at a conference of financial planners, and it's the cream of the crop. It's called NAPFA, National Association of Personal Financial Advisors, which is a mouthful. And I was in a session with you, Marcia, earlier, and we all consider ourselves to be experts in financial planning and all that, but you're the expert's expert.
Well, thank you, Rob. Yes, but only on two things, Social Security and Medicare.
Okay, well, those are weak areas for a lot of financial planners. I think you know that.
I might know that, yes, and I might try to team up with financial advisors because my weak area, of course, is investments. Like, I don't know. It's okay. That's what you all are good at, or big estate planning, or big, small business planning. I fit in my little lane, and it's a partnership.
Okay, well, it's a very important lane, and that's why we're going to talk about it today. Most of the people that listen to this podcast, Marcia, are business owners.
Right, like us.
So we have some perspective, and we're going to talk about some of the primary issues, I guess, that they need to think about as they start entering this phase of selling their business and Medicare and Social Security and how all that kind of integrates together and some of the traps.
Oh, that will be a great conversation because there are many. Some decisions, we made years ago, and so now we're going to live with the consequences, but other things you can get ready for. And the sooner you think about the potential of selling a business, the sooner you can put good pins in place for these big federal programs. So we don't want to wait until 64 and 9.5 months, for example. It's a little too late at that point. So I'm more a fan of start this thinking when you're 50 and just know what's coming, that train way down in the tunnel.
Okay.
And then at 55, it's a new assessment. And then at 60, you get really serious because these programs are unforgiving. You make mistakes, you get penalized. You claim Social Security too early, you get too little money. You don't contribute enough as a business owner. This is probably the biggest thing I run into with small business people is they're set up as S-Corps a lot of times.
Sure.
Which is great. I'm an S-Corp, love it. But they set up S-Corps to be extremely tax efficient for each given year. But what they don't realize is the less salary they take, the smaller Social Security will be all those years later. So I always think of it as it's not a battle, but it's different perspectives between planners who are trying to plan for your future and your retirement success and the accountants who want to save every dime in the current year.
No, that's a good point.
They're just two really different schools of thought, but you at least should know. As the business owner, you should know that there are two schools of thought. And you make good decisions when you have the information you need.
Excellent. So I love the way you frame that at the different ages, at the 50, 55, 60, and then obviously at 65
yes.
and going forward. So I'm guessing that at 50, you really ought to be looking at your compensation like this and trying to make a decision as to whether you're going to maximize your Social Security for you and or your spouse who may work in the business as well.
Yes.
So we can talk about that too. And or minimize the taxes that you may pay in FICA taxes.
Right.
So give us some insight into that. So let's say me, for example, because Shelly, my wife, she works in the business.
Yep.
And for the most part, go ahead and max out on the Social Security for me. So my earnings going back, in essence, pretty much we just max out the Social Security side.
Right.
But Shelly's we don't do is quite at that level. Yeah. She stayed at home with the kids a lot. She has some of those 0 years in there and some things like that.
Yes, the popcorn careers.
The popcorn career, for sure. So I don't know. Am I doing it right? Tell me what you think.
That's a great question because
Okay.
that's the essence of the question. Am
Yeah.
I doing this right?
Okay, tell me. I'm trying to know.
Well, I'd have to actually, I'm better with paper and pencil, to be honest, to look at all the data. But for you,
Yeah.
I'm going to assume you've always been the higher earner, or for the most
Yes.
part of your marriage. So you're the higher earner. Yes, you want to get to the taxable wage base. If you can, if the business can support it, that's fantastic. I want to say it's like $147,000 this year.
Yeah. I think
So,
that's right.
and you
Yeah.
really, as the small business owner, you know that at the beginning, when I do my pro formas each December for the following year, I know exactly what the taxable wage base is. Divide by 12 and see if I can support that salary. So I think all small business owners should be doing that. Some years you're going to make it. Some years you decide to invest more in the business. So you might not have enough cash to keep that up. But it's a really smart decision because you're making it based on information. And just there it is. And the taxable wage base will go up quite a bit. I don't
you
have
would
it
think. Yeah.
with the inflation. So it's going to be up, I don't know, I'll make up a number, 160. Yeah.
I think I saw. I think it's
I
going to be
did
like
too.
160.
Yeah, so whatever that is divided by 12 is a lot of income that you would be bringing in. So here's a trick. Know that number, and that's your target. Because you don't,
Sure.
there's no reason to go above that. I mean, unless you personally are bringing in millions into the business, then you might have to go higher than that and
let's
pay
talk about that, 'cause
Medicare.
on the accounting side, they will say that you need to, because the IRS will come in and say,
Yes, they will.
hey, so what does somebody normally in your position get paid for what you do?
Right.
And you need to be somewhere in that ballpark.
You
So there's
really
that
do.
test.
You can't, you can't short shrift your taxes.
Right.
We all have to pay them. So just be smart about it. But yeah, so if you're making $1 million and you're only taking a salary of 147, that's not in balance. So you probably have to take a higher salary. Your Social Security FICA taxes are capped at the 147, the taxable wage base. You keep paying into Medicare though. There's no
Correct.
cap on
All the
Medicare.
way
So
through.
all the way through. So that's just, I mean, really, yay for you. If you've got $1 million coming into a business or more, take the salary. Pay into Medicare. It's fine.
Now, I will say that I don't know, just to argue for argument's sake, sometimes I think it's not, so a business makes profit.
Yes.
Okay. And what I've always advised is, your salary where you're making that test is based upon what you're actually doing inside the business.
Yes.
So if you're a financial planner, then you look at, the wage pay. How much would it cost to bring somebody in to do what you do?
Yes, that's a very good metric, as well as it's really the balance between what you're taking as salary and what you're pulling as a draw. So let's say for your household to run, you want to bring in $250,000 into your household.
Okay.
So you bring in, we'll just say 100 in salary, actual W-2 wages, and then you pull out of the profits of the business the other 150. That's a little out of balance. The IRS could look at that and go, wait a minute, the business is profitable, they're kicking in, good revenue and good profits. He's really not paying himself enough when he's doing a draw that's substantially larger than the income. So it's always but as a small business owner, you get to decide. You get to figure this stuff out. And if you're not taking 150 grand as a draw, and you're taking 25,000 as a draw versus 147 as your salary, well, that's okay.
Yeah.
So you just need to be aware. And this is where I look at these two lanes. The accountants would tell you, take as little as possible as salary and take the rest as a draw to run the cash flow for your household.
Yeah, you do see that.
You really do. And I know that's how I got caught up in. I met, I live in Massachusetts, and I got a knock on my front door one day. This is years ago. And this man is standing there. It was hot. It was a really hot summer day. Not like Texas, but Massachusetts hot. And he's at my house, which is where I was operating my little business from. And he goes, "Are you Marcia Mantell?" It's like, "Well, who are you?" I goes, "Well, I'm from the state revenue department."
Oh, man.
Yeah. And so, that's not the knock you want on your door.
No, we want to
and it
avoid
turns out
those.
I wasn't doing anything wrong. It's just I hadn't filed some particular paperwork on the business and such. So that's the thing you want to avoid. And you don't want the
all those
IRS
things,
sending you, your letter that you didn't pay your estimated taxes properly, or, hey, we want to audit and look at your business any further. So that's
Okay.
why I always look at this balance. And I do kind of what would I call it? Some steps. And same back to you and your wife. It's
Yeah.
the same stepwise sequence. You always want to take each year. So you're going to look at how your business is doing and what you can draw in as salary, W-2 wages. Then you'll look at your wife's situation and how much is she being paid, and is she feeling good about that amount?
There's some of that.
Exactly. She gets a say in that, I would like to think, because she is very valuable in this role.
Well, not only that, but I mean, one of the other reasons why this is an interesting tangent though. So, having both family members in the business, another big advantage to, paying both a salary, even in an S Corp, is you can do 401k for both of you.
Yes, you can.
And FICA is on the higher number.
Yes.
So you can pay the 147, for instance, and then take a maximum 401k withdrawal off of that.
Yep.
And not have to pay, income tax on it.
Right.
And you're doing that for both you and your spouse.
Right, and you're really amping up this future
absolutely.
bucket, this big retirement bucket. That is so important.
Right.
I mean, this is why I love being in the small business arena, because we can read about the rules, right? We have, good God, we have so many rules in our business. So you read about all of them, and we think of them, though, as I always look at it as GM or Ford, 401ks for the big guys. Well, they're for us, too. Okay. And, we really can start to set up very wise current, keep the household running, and future dollars. These big retirement buckets that we do need to accumulate. So yeah, that's a super good strategy. And let's say your wife is getting, I'll make up this number, $25,000. Well, that's almost the maximum you can contribute to the 401k.
Yeah, and it also gets her her quarters as well.
Yes, it does.
So we stay current, and that's important, right?
It's super important to women. Let me tell you, these women who have popcorn careers. So my career path, I started in 1979. I've worked every year since. Not always a good thing. Yelled at my kids a lot in between there, but nevertheless, that was my path. But I work with so many women when they get their Social Security statements. So again, why 50? Because you can start to jump in and manage the emotions. Because if you are a woman who stayed at home and did way more than all of us who worked, let me just say that. These at-home moms are extraordinary. You look at your Social Security statement, you see a big fat zero.
Yeah.
Or you see little piddly numbers. It's like, what the heck? I did all this work, and now this foundation for my retirement basically says I'm worthless.
Yeah.
That is not what women should be facing, or their families. So that your wife has an income, she's getting her quarters, she will be independently eligible for her own Social Security benefits.
As well as other benefits through Social Security as well.
Exactly. Should anyone become disabled or spousal benefits and so forth. It's so important just to her value, because I know the very first article I wrote for Retirement Weekly, one of the Dow Jones publications years ago, was about this woman that I had met who was exactly in that position. Here she is, 65, 66 years old. They're for the first time sitting down looking at their portfolio, which now includes Social Security. They had saved a bunch of money. That saving was not the problem. The problem was she was so shell-shocked seeing her statement with all these zeros. She had worked, but she had worked in an uncovered situation.
Right.
And he was the higher earner in this couple. She was so bitterly disappointed. It's like, that's it. I mean, we were just talking about the word retirement, and so I happen to love that word, but the technical definition is not a pretty one. It's you're withdrawing and you're, kind of rolling in a corner like an armadillo, rolling up and, you're just there to, end your days, shall we say politely. This is not what she wanted. She was not ending her days, but she had no value on this really important program that we have. So I think for clients, if you're who's ever in the financial advisory business, every woman should have an IRA. This is, again, these two lanes, the accounting lane and the financial planning lane. But I picked the woman's lane as well.
Yes.
It does not matter if that IRA is tax deductible or not. I know the accountants think it does. It does not. It gives her ownership. The only type of account where you are an individual owner, where you make every decision, every investment decision, how much you put in, how much you take out, who the beneficiaries are, is an IRA. That's the one.
Yeah.
And so if
it's
every woman
empowering.
doesn't have, yes. So, and it's not big, as you know, either. It's $6,000. I mean, it's like,
so you kind of sound like me talking to my
ownership.
daughters. You really do,
Yes.
because that's always been a big deal to me.
Oh,
That
I'm so glad.
you're able to have some ownership in a lot of these
Yes.
things. And so starting at 50, you still have, before 65, you have
right.
15,
You've got 15 years.
to be able to do stuff.
Yeah.
And not only that, to be able to look, and I know we talked about this the other day, but look at your earnings statement and
Yes.
kind of plan out. And then you gave us a number the other day, like how many years does the Social Security use? I can't remember.
Yeah, it's your highest 35 years.
35 years.
Yes.
Okay.
So over, your lifetime from, 18 to 65, whatever that number is, more than 35, the highest earnings will be used in your calculated benefit.
So you should look at that and you should control that a little bit and think about that, because you don't want to
Exactly.
have zeros. Just like we were in college, you know, and you don't want that zero, you want it to be dropped, right?
Yeah, you really want
Yeah.
it to be dropped.
Yeah.
Yes, it's a great analogy.
Okay.
And it's so important because at 50, what we want is for people to be in control of their decisions. So some women will look at that. I have some nieces who are at-home moms. They may look at their at-home. They have a few years of earnings before the kids. So let's say it's 5 years of earnings, not enough to independently qualify. Then they're at home for years, for decades. And then they're 50. And if you take a look at the statement and the earnings history at 50, they get to decide, like, I'm okay staying home. I get it that I'm going to be a dependent spouse in terms of Social Security, meaning I'll get half of his when I reach my full retirement age. That's a good decision if that's what you want.
Sure.
Or they might look at it and go, all right, I'm halfway there, or I'm 9 years in, so I have 36 qualifying quarters, I need 4 more. Like,
Yes.
I could go back and work part-time, I can go dabble, or a friend of mine asked me to join this retail shop or this online endeavor they're doing. I could go do that. You don't have to make $1 million. You have to make about $2,000 a quarter.
Yeah, not a lot.
It's not a lot. And you earn those quarters. And they may feel better about that, even though when they look at their calculated benefit, so you have 10 years now of earnings into the 35 years of highest earnings, and you have 25 zeros. Doesn't matter. It isn't always about the number. It's about, I qualified too. I'm independently going to get a benefit. It won't be big, but I'm going to get my benefit, and then I'll get a spousal top up so that still in the calculated value, I still get half of my husband's PIA, we call it the primary insurance amount. But some of that was mine. It was on my earnings. And I just think that's so important for women to know, and wives who work in the businesses with their husbands. This should be a discussion. Like, heck, am I going to get my 10 years, my 40 quarters?
Yes.
Am I going to get a calculated benefit? How much will it be? And even if it ends up, we used in our workshop the other day, I have to do simple numbers, Rob. If my husband, Dan.
By the way, we appreciate that.
Oh, good, yeah. I was like, I can't divide without a calculator. So if my husband, Dan, has a insurance amount of $2,000 a month, as a dependent spouse, I'm entitled to $1,000.
Right, to half.
Half of his, as long as I wait till my full retirement age to claim. So, okay, so now I know that's what I'm working with. But if I've worked even these smaller jobs and I have a benefit of $800, I'm going to get my $800. And you
Right.
feel good about that. You have paid into the system, get out what is yours. I also get a $200 spousal top up because I'm going to get my $800 plus $200 as a spousal benefit so that my calculated value is a grand total of $1,000.
Right.
So it's kind of a win-win. And it's knowing it way before you're turning full retirement age, which now for most of us is 67.
Yeah.
So,
So-
the surprises are bad. That's where I'm going.
So that was kind of 50 to definitely probably take a look at your
Yes,
earnings
earnings record.
statement and do some planning.
Yep.
Okay, so I'm 55.
Ooh, I'm
now.
61.
So what am I supposed to be doing at 55? What are some other things that I need to be looking at
Yeah,
now?
What's really interesting about today in our
Okay.
where we are in our history. At 55, the reason I like that age, it's two big things. The first is, are you even thinking about selling the business at some point or having some kind of succession
Well,
planning?
I think that I ought to be.
Well,
And
I
am.
do think everyone at that.
Yes.
And the answer could be no. Like, nope, I'm not going to do it right now. Fine.
That's fine.
But it's
Okay.
on the table, and that's your plan A. Now you have plan B. Oh, crap, something happens to me.
Mm-hmm.
Something happens to my wife, to my kids. I get sick, or I'm just fed up. So what happens if you have a plan B? Well, there's no point in having a plan B if you don't do it in advance, because on the cusp of a big change, you don't have any pins in place. You don't know what steps you would need to take or how you would. It's the same as estate planning, right? We need to have some of this information in place so that we're not burdening our family, or we don't have to make a rush decision when something bad befalls us. So I like a plan A and a plan B for business owners. That's what we do at 55. The other reason is to start to get your arms around Medicare.
Okay.
And when we say Medicare, people think it's one thing, like, that's not till 65, and then I'm just going to waltz in and I'm going to have Medicare.
No, I don't think anybody thinks that. We all know it's complicated, and we're all just wanting it to go away.
Well, yes, if there could be something easier. And I think of Medicare, so I'm trying to change the conversation around Medicare.
Okay.
Because, oh my God, I saw the worst commercial ever on TV here in Colorado yesterday about Medicare Advantage plans. It was just the worst. I actually videoed it on my phone so I can take it back and have it in my arsenal of what you shouldn't do. Sorry, a little sidebar. So Medicare, we need to change the conversation. It's complex, but it's not actually hard. But it's super hard if you're trying to figure it out 2 weeks before you're supposed to get into it.
Agreed.
So here's the changing conversation. I'm drawing a box here on the table so Rob can see it. It's just 4 boxes. Medicare is a quartet, and it is really that specific. You have Medicare Part A for hospitalization, Medicare Part B for outpatient services in your doctors. Mm-hmm. Okay. Medicare Part A, you've been paying into with your FICA taxes. So that's covered. You're going to get Medicare Part A for free. Everyone seems to think Medicare, don't know it's a quartet, that the whole thing is free because we've been paying FICA. Oh, it's so not free.
Oh, it's not.
It is not even
free.
And that's why 55. That's where we're going with this.
Okay, I really do love that because, what's happened now is that, Medicare Part B premiums are dependent upon your income.
Yes.
So now, we're getting some good stuff.
Oh, yes. So just to finish the quartet real quick. So A and B, and everyone has to have A and B at the end of the day. You can't get anything else. You can't get a Medicare Advantage plan until you have A and B in place. You have your Medicare number.
And pay for B.
And pay for B.
Yeah.
That's the key. Then you need drug coverage. So you get a standalone Part D plan, or it comes packaged in with your Medicare Advantage. Different people choose different lanes, but it's still 4 parts. It's A, B, supplemental, and Part D.
Yeah.
They all cost something. They just don't all have a premium. And that's where things get unraveled for real people who don't have any time to deal with this. A is paid for, but you pay usage fees. If you go in the hospital, you have a deductible. If you stay too long, you pay daily rates. There's all kinds of fees built in.
Yeah, and that's what your supplemental's for, is to cover
Exactly. Actually, it covers all of it.
Right.
So if you have the supplemental, but if you didn't know you needed the supplemental, or you missed your appropriate time periods, everything has certain dates that you can enter. So if you didn't enter Medigap, I'll pick Medigap for now, in the first 6 months after your Part B was in place, first of all, you have no secondary coverage. So you're paying for those fees, and that's what I really hate about this whole process, but you're on the hook for paying that. And if you're outside of your initial 6 months, now you go through medical underwriting, and you may or may not get the Medigap plan of your choice.
Yeah, no, we don't want that.
So, right, we don't want that. But even after just those 4 parts, and I have a whole separate budget worksheet I use with people. So you get your Part A, your B plus IRMA, D plus IRMA, Medigap or supplemental. Then all the stuff that's not included that you have to solve for: dental, vision, podiatry, hearing, your stuff at CVS or whatever your drugstore is, your comfort. A lot of things in as you age, we don't like to talk about them. Oh my God, my feet hurt all the time, Rob. So it's like, what Dr. Scholl's things am I buying and shoving into my shoes kind of thing. So we have all these things that we do over the counter now, or a lot of the drugs have moved from prescription to over the counter. All these
and they're not going to be covered.
They're not covered, right? So you've got a budget for all of this. And this is a very long way of sharing with your audience that the reason for 55 is you want to do an initial big detailed budget of just the healthcare side of your life. It's a really big number for most people. And small biz owners who then sell the business, or even if they continue it and they're, they've worked so hard over the years and now they're finally reaping these benefits as you get into, older age, you still get older. You still spend a lot of money on healthcare, and you need to know your number, because my number is not your number. We're all going to have something different, but it's not cheap.
Okay, so I love that, because we talked the other day in your class, so when I first got in the business a long time ago, everybody talked about Social Security, it's not going to be there for you when you retire. You're going to have to do all this on your own. It was only going to go through, I don't know, whatever
I know.
it was.
1983, it was bust, and then it was every year since then.
That whole deal.
Yeah.
And, I tell my clients exactly what you told us all the time. So I'm not worried about Social Security.
Yeah, right.
What I am worried about,
and you should be,
is I'm worried about healthcare costs, because, like you said, our bodies break down and it's part of it. I worry about an absolutely broken healthcare system.
Yep.
Okay. And now, obviously, Medicare. Yep. Those are the things that I worry about the most. And that's where we see the expenses creeping up on people that are retired.
Yes.
And you just can't do enough planning around that. So I love the fact that you do the 55 analysis, look at and sit there and realize and go, oh, you know what? I've been paying for my health insurance through the company, all this time, and I've thought it was expensive.
Yeah.
Well, it could potentially even get more expensive with IRMA and all that.
Yes.
Because before all that, we used to talk about, it's going to be great. You're going to go on Medicare and all that kind of stuff. It's going to be awesome. It's not the case anymore.
No, it's not.
It's also a great time to do an HSA if you don't have it already.
Love it. Yes.
Yeah.
Yes.
And start saving up your cookies.
Yes. Yes. And HSAs are they 15 years old this year or 12 years old?
They're not very old.
They are not very old.
Yeah.
And they're like every new product that comes out. I mean, the 401ks, when they came out in '82, they took a long time to become this behemoth of an industry.
Yeah. IRAs,
right?
all of it. They take a long time.
They do. So the HSAs are almost to their tipping point, as I'm feeling. They are so important. If you can have them and get them in your business, these are things, again, small business owners are too darn busy to have to figure all this out. But if they can get an HSA set up, and it's a high deductible health plan, you've got to play with this scenario versus that scenario, so what? Do it.
Honestly,
because the HSA wins every time.
I don't know, but in Texas, we all have high deductible health plans right now because we hate HMOs.
Oh, yes.
So, we're just kind of independent beings, I guess. And so we all have them.
Yeah.
So just get the HSA and, and then don't spend the money.
And,
save it up. Because you can use it in retirement for healthcare costs. And you'll need it.
You will need it. And it's so interesting you say that. I didn't know that about the Texans. I know you're very independent,
yes,
but
we have real issues.
Oh, it's mostly good. But HSA is very powerful, and you're right. If you don't have to spend it, that's where it really works. But you've got to be a pretty high earner. You had 4 kids. I had 2 kids. I mean, every other day. Ear infections, broken arms, broken hands.
It's hard.
It's really hard.
Yeah.
But then. So maybe in those early years, all right, fine, you use it as spending, saving, but make the contributions, just get in that habit. Then finally the children leave. Mine are long gone at this point.
Congratulations.
Thank you. I love them dearly, but it was time for them to move along, be contributing adults in America, and they are.
Great.
So now my little one actually is the one with the HSA. So we've got her all set up. She's 26.
Oh,
this is perfect. This is the time you start when you can. So this is the opportunity for your kids. But for us, after the kids do leave, you can now start to see real significant savings if you keep,
Oh, no question.
redirecting money
we
into
see
there.
it. Oh, yeah.
So
It's going to be used. So that's a good 55 check.
It is.
So the 55 that's a health check.
Actually, it really is.
Okay.
That's I do. Succession planning thoughts.
Yeah.
Because a lot of times by 55, a lot of small business owners, they've been in the game for 20 years now.
Yeah.
And it's time to take that break. The kids are older. Life has done its thing, but you just have to be smart and think about the future, even though. My dad is 80, just turned 84, and he still has his business and he's independent.
And that's fine.
Great.
But just
have
a
plan B.
Yeah,
so that's really important at 55. And then it is this health check.
Okay.
And then there are so many moving parts these days, and it's only going to get more complicated. It's really, really tough right now out there in healthcare land. Very, very difficult. But it's what we have. And this is one of the things I tell a lot of people. They're so frustrated. The clients are so angry and they're so frustrated with this mess. I wrote a series of 4 articles for Life and Health Advisor. The 4th one's just publishing in November. And we called it Medicare Madness. That is what it is. It is absolute madness. But it doesn't matter. It's what we have today. So unless you want to go be a policy person in Washington or you want to be a lobbyist, which most of us don't, this is what we have. So let's understand it. Let's understand what we're not being told. Let's understand how to navigate through this madness so that we're prepared. We are doing the best we can. And for small business owners, you have a really small business, right? You've got 4 or 5 people in the business. So less than 20. When you're in a business, fewer than 20. And you're reaching 65. You still are running the business. Let's take this scenario. You're still gainfully employed in the business. You love running it. If you're the oldest one in the business, even as the owner, you must sign up for your Medicare A and B in the 3 months before your 65th birthday month. Because even though the company is still going to support insurance for everyone else, not for you. Small business owners have to have a primary payer at age 65 of Medicare.
Right.
So if you're not in Medicare, you don't have a primary payer. Your company's insurance can't pay your claims. So you go out. I read some of the about me on your website, and you do duck hunting and woodworking. Oh, God forbid you have an accident at 65 and 2 months. If your Medicare isn't in place, that's all on you. That cost that $20,000. There you go. There's your HSA.
So you have to mark your calendar for that, for sure.
Yes, you do. And the owners are the ones. It's interesting. I get a call from a lot of financial advisors in kind of your size shops, and they will say, small business, what do I do? And I'm turning 65. I don't have to be in Medicare because I'm the owner, right? No. There's no carve-out clause in your health insurance policy today that says, special owners.
It's only large.
It's the large employers,
group.
right?
Yeah, large group, you don't have to sign up at 65 as long as you're fully employed.
Exactly.
Yeah.
The key is to be that active worker. That's right. So that's a big shock to a lot of small business people.
I think that's important for sure.
Yeah.
So the other thing, so we went from 50 to 55 and 60. So I'm going to make a guess that at 60, we really need to get into some details, and we especially need to look at some of our future compensation, how we're going to do some things like Roth conversions and stuff like that, because we've got IRMA to do. Okay?
Yes.
Yeah, so tell us what IRMA is and how we best plan around it.
Yes, so IRMA is an acronym here in Medicare land and Social Security land. And I always think of IRMA as like this 1940s young woman in one of those kind of fluty dresses, and she's got the donut tray on her. I don't know why I have this image in my head. That is not IRMA. You would like to meet that woman.
It's probably more like a hurricane, Hurricane
Irma.
Irma.
Is like her hurricane. And what it is that because you've been successful, and you're going to have high income in retirement. By high income, I mean on the front of your 1040 SR, because we switch over to the SR form, mainly so we can see the words. You look at the section that says income. It's Social Security, it's W-2 wages, it's pensions, it's not qualified deferred comp, it's anything that is now, it's distributions from your 401ks and IRAs.
Yeah.
All of this tax deferred money becomes taxable in retirement.
Right.
And you can't always control it. By 72, you don't control that. You have your required minimum.
Correct.
So
Correct.
this is what, you look at the front of the 1040 and you'll see what we mean by income. When that income exceeds a baseline threshold, it's $194,000 for those married filing jointly in 2023, and I think it's 92,000 for single filers.
Okay.
So it's a healthy amount of income, but not if you did really well and you have really big retirement accounts or you have non-qualified deferred comp money coming in to your household.
I mean, this is a perfect storm for a lot of folks because,
It is.
I mean, this is right when these can very easily be your highest income years. I mean,
Yes.
this is when you sell your business a lot of the time. This is when those deferred comp arrangements start to pay. Like you
Sell
said,
your gigantic house and start to downsize.
right? You know, you have all these financial things happening in a big way right around the time that they're very interested in your income so they can determine how much you're going to pay in Medicare Part B.
Yes. Yikes. Yikes is right. And if you don't know that at 60, what we're doing in the financial industry is we're misguided a little bit because people don't know this in our industry, let alone the clients. IRMA is, so it stands for Income Related Monthly Adjustment Amount. And the way Medicare Part B premiums are written in the law says that all Medicare Part B beneficiaries will pay 25% of the prevailing premium for the year. So our premium this year is at $170.10. It's going down a little bit next year. That's only 25% of the actual premium that is estimated by the gurus who run Medicare. And they're really good at estimating how much it's going to cost per person to use Part B services, outpatient, pay for your doctors, durable medical equipment. So there's a number. It's a big number, and we pay 25% of it. However, if our income is higher, we have to pay a larger percentage. We don't pay 25%. We then might have to pay 35% of the prevailing premium, or 50%, or up to 85% of this year's the big number premium for Part B services. And that's what happens when you mentioned earlier you're concerned about Medicare being there and the concern around it's a real concern.
Yeah, absolutely.
That this is tough in the healthcare industry. Everything is it only goes up. So how do we manage that, balancing tax dollars and Medicare premiums and so forth? So it's there to help shore up. IRMA was put into place with the Medicare Modernization Act of 2003 under the Bush administration. So we have this provision that says if you have higher income very often because you were successful, you successfully saved, you successfully sold your business, all these good things that we do on the income side. Well, if you have high income, you've got to pay a larger share. Or said the other way, the government is not going to give you as large a subsidy. Because when you have the standard premium, you're getting a 75% subsidy.
Yeah.
That's pretty generous. That's really pretty nice. But it flips, of course, when you have had all this success. So you can be mad about it. Most people are. Or you know it and you plan for it.
Exactly. I mean, it seems to me, just, knowing, and as a financial planner, obviously, we're all about trying to project these things into the future, look at them now, see if there are any adjustments we can make. Sometimes there aren't.
Right. Sometimes there aren't. But lots of times there are, even if it's just knowing that, oh, dang, this is going to hit me. I wasn't budgeting that much for my Part B.
Well, for the plan, for sure. And not only that, but we talked about the other day, it's so important. This is generally like a 2-year look back on the income. So, by 60 or so, you could still do some things with your deferred comp, Roth conversions, things like that, and make good decisions.
Or if you were waffling whether you're going to sell the business to the kids or not, maybe stop waffling. Get
that done.
Get it done.
And
it really is before you're 63 is about the right marker, because if you've got to join Medicare at 65, which most small business owners do, the look back is the 2 years prior. So Social Security will literally look back at the most recent income they have on file with the IRS And that's the income they're going to use to determine your Part B premium. So you do have to like put some pins in place. Those early 60s, 60, 61, 62, super important years for planning.
Big time planning years.
Big time.
Yeah.
And also because whether you're going to do it or not, I swear, Rob, every single person in America knows age 62, the gates of heaven, oh no, I mean Social Security, the gates open wide.
At 62.
At 62.
That's what they think.
Every single person knows that. And it's like, oh, it's so tempting. You could be a multimillionaire. And then, oh, at 62, I can claim Social Security, right? So I don't wait till 62 to have this conversation because they've already made up their minds. And so I wanted it at 60 so you can start to do the projections and look at the implications.
So there are decisions like that have to percolate sometimes.
They do.
Yeah, you have to think about it. You have to get mad about it.
Yes, and go through that journey.
You have to do that whole thing, whether it's Medicare or also waiting, which most of us recommend that you do.
Yes.
Waiting on taking Social Security. That's something that sometimes you have to kind of try on a little bit.
That's a great phrase. Yes, it is. Because what we're being bombarded with, and this again, changing the conversation is what I'm trying to do to help more consumers. The media is screaming. I mean, I call it the hype and hoopla of the headlines.
Yeah.
This is what all of our clients are bombarded with every single day. It doesn't matter what walk of life you are in. You read these, you see them, you hear the politicians screaming about them. We got to shore up Social Security. We got to cut it right out from under the seniors. We got to fix Medicare. We shouldn't have Medicare. What are you supposed to do as a normal, regular person? You're being bombarded by all this. And so if you haven't sat down at 60 to start to get the facts set, pulled together for you, it's really hard with all the noise out there.
Yeah.
And then what ends up happening is you just throw up your hands, you say, screw it, I am just going to claim. This is too much. And you've made what can turn out to be a really bad decision for the long haul.
Oh, for sure.
So that's what we're trying to do in the industry is avoid that.
Yeah, and so this is the way I talk about Social Security a lot of the time, and help me phrase it as well, because you do it better than I do, I'm sure. But it's an insurance program. It's social insurance.
Yes.
So a lot of times, especially my engineers, and I love them.
Yes.
Okay, they'll come in with these spreadsheets and with their break-even points, and so that's good information.
Yes.
To do. But none of that really matters because it's really insurance. It's insurance against longevity, against living too long.
Yes.
So a couple of things that you want to make sure of is that, hey, if it's insurance against longevity or living too long, you want the number that you start with to be as high as possible.
Why, yes, you do.
Which means that if you can, you want to put it off until 70 because it's going to be a much higher number.
Yes, it is.
Yeah.
And I love that positioning. It is insurance. It is social insurance, which means you don't control the formula for how it's calculated,
Right.
but it is calculated. The calculations and the actuaries who work on Social Security are just really extraordinary people. They are so thoughtful and just looking at every possible angle to make sure things are as fair as possible.
That's good.
Yeah, I mean, not necessarily for you and me individually, but fairness for 69 million people already collecting Social Security and all of us coming forward. So it is this fairness, it is longevity insurance. It's also about protecting your spouse. And that when you're married, if you're not married, it doesn't matter. But when you are married, and we'll go back to you and Shelley.
Yeah.
You're the higher earner and Shelley's going to have some benefit. Great. And let's say both of you kind of max out by the time it's time to claim. Well, that's great. You're going to have a higher benefit than Shelley will. And then we have to talk about the really ugly stuff. And that's when you die. And from my class the other day.
It's so easy for me to do that for my clients. I didn't like it coming back my direction.
Well, and my husband, Dan, also doesn't like it that I kill him off in every presentation.
I kill off a lot of people in
scenarios.
In scenarios, but now it's happening to me. That's no good. Okay, but yeah, you're right. So something happens with Social Security for sure when that happens.
Right, because what we're trying to do, and especially in marriages, you need to protect the lower earning spouse. in the event you are the first to die. Now, we never get to pick who dies first or how and any of that, but the planning process looks at both people, right? And when there's a higher earner, the goal of that higher earner is to make sure that their lower earner spouse gets as much as possible within, what this construct of this program is. And the way that happens is by the higher earner waiting longer to claim.
Yeah.
Because then what'll happen, and I'll just pick on Dan because I don't want to kill you, Rob. But
no, you can. I probably need this.
You can take it?
Yeah,
All right. So if you do die first, it would be very sad for Shelley, but you don't want her to be financially distraught in any way. So you want to make sure that she has as much money coming in from this guaranteed stream of income as is possible. That means you claim at 70 and you'll pick a different decision for Shelley.
Yeah.
So it really comes down to that simple.
It is simple. The other thing that people don't realize is how well indexed Social Security is to inflation.
Yes.
And man, this year,
I know.
oh my gosh.
Yeah.
I mean, traditionally, we really worry about retirees when inflation is high, and we still do,
Yes.
because this obviously isn't their full income.
Right.
But
this was a winner.
this was a big one.
Yes.
Yeah.
And it's actually a combination of things. So very often what happens is Social Security might deliver 2, 3, 4% inflation. I always use 2.5 just from a planning perspective. And this year we got 8.7.
Yeah.
Now that's of course because we've got some raging inflation. So bad news, high cost. Good news, higher adjustment, COLA, cost of living adjustment in Social Security.
By the way, on the investment side, I'm having a really hard time, matching that this year.
Yes, indeed.
So it's a big deal.
It is a big deal, and it is because most people are on a fixed income. We tend to talk about it only in terms of once you leave your job, but I have a salary. That's a fixed income.
Yeah.
People who work in corporate America, fixed income, but you feel like you have flexibility. You can go and find a new job. When you're in retirement, no one's going to hire you at 85. I mean, that's just not a realistic
Correct,
expectation.
yeah.
So your employment possibilities went down to 0. And that's why they feel so strapped. So yes, they got this big 8.7% COLA this year, but they also got a $5 decrease per month in their Part B premiums. So you're getting this bigger Social Security with a little bit less in Medicare. So the ship is righting a little bit now, where it had been you'd get 2 or 3% increase in Social Security in the prior years, and a big boost in your Part B premium, and it negates it.
Yeah,
right.
That's right. That
So
happened. Yeah.
we're actually going to get for our seniors a little bit of a step up.
that's good.
So it is good, and it will hopefully start to make things a little more affordable. We need to deal with, property taxes at a more local level. They tend to go up a little too high for our seniors.
Yeah.
But also don't be shy looking for programs in your states and in your counties that are for seniors. We have this really interesting little act in Massachusetts called, what is it called? It's got a strange name, the Circuit Breaker. And it's for our seniors. So once you're over 65, we take a look on the state tax side only. How much did you pay in your property tax?
What's state tax?
Oh, I know. You Texans, you got none of that, right?
Oh.
Taxachusetts, as you know, they call Massachusetts. So I forgot about Texas being income state tax free.
Yeah, they get us another way.
Well, exactly. You're going to pay anyway. So just for us, we do have this circuit breaker thing where how much you've paid for your property tax relative to your income. Back to income. Usually for a lot of seniors, they only have Social Security as their income. So they get a break up to $1,000 in this property tax rebate. So that's just, every state has something. They have something for seniors. They have something that should be considered. And it's like, that's awesome. If that applies to you, don't be shy about this stuff. Again, it's really great when you've had a successful run and you don't have to worry about making every penny count.
Sure.
But we have the other side of the equation too. And I see everybody, the high net worth, the constrained, and the folks who really, are just not as fortunate.
I like how this went, Marcia, because we kind of did the 50, 55, 60 thing. That was really cool.
I'm glad.
Yeah, because that's a lot of times on these podcasts and in talking to business owners, it's just, they're so busy.
They're so busy.
And, it's good to have like demarcation points.
Yes.
And planning opportunities, ahead of what we see coming down the pike.
Yes.
And I just love that. And I'm looking forward to getting with a lot of my clients and looking at their earnings on their Social Security and in a new way, because we've talked about this and kind of looking for some of those zeros and things like that.
Yes.
Which we haven't done as much of before. So that's going to be really helpful.
Yeah, and I love that. And I told this story the other day in our workshop. My husband has 6 or 7 zeros on his earnings record that we didn't know until we were about 55.
Okay.
I mean, Social Security has been sending us statements. It's not like we looked at them when we're 30, but then they stopped sending them. And you have to set up your own account on socialsecurity.ssa.gov and pick the My Account. Mm-hmm. You set up your account. Dan and I were setting ours up, and we printed them out. And I'm looking at mine, and I see, $125 that I earned in 1979. And it's like, oh, I don't want $125, even indexed for wage inflation. Like, that's not going to be a number I want in my highest 35 years. So we were joking about that and playing with my numbers in the early 80s. And they were not impressive numbers, let me tell you. So then we pull up Dan's statement in those early 80s. It's like, oh my gosh, we have a huge mistake. Social Security, this is always the reaction when you see zeros. Social Security made a mistake.
Yeah.
Yes, we got to go, how are we going to fix things 30 years later? And as we think about what we were doing in the 1980s, well, Daniel was in grad school.
Yeah, so it makes perfect sense.
Yeah, so he's getting a stipend and fellowships and all these other ways of getting money when you're in a university system. So doctors, they all had med school. They might have been getting fellowships, right?
So I was in the Navy.
Oh.
And so first of all, junior officer in the Navy doesn't get paid very much, but a lot of it is tax-free.
Yes.
All of your allowances, your danger pay, your sea pay, all that. So I was looking at I was like, I know I wasn't making that much, but was I really not making that much? And it's because of all those allowances and stuff.
Exactly.
Yeah.
So everyone's going to have a different journey, and to Shelley, she's going to see, a few years of working maybe before you had kids, and then a whole bunch of zeros, right? And then she comes back and starts working in the business, and so it picks up again. And other people have a couple of low years or unemployment. A lot of people why do small business people start jobs a lot of times? Well, because in 2008 and 2009, you got fired from your big corporate job. And you said, crap, I got to still put food on the table.
So there could be some low years through there.
Absolutely.
And it's all okay. All you're really trying to do is, use that information to make some good decisions going forward. And that's why we're doing it at age 50, because you've got really 17, maybe 20 years to strategize.
Absolutely.
Yeah.
And, I work with a lot of people in the bigger corporate America side too. And, they're really burnt out. 50, they're feeling it. 55, they're a wreck. If you've made it to 55 in big political corporate America,
very true.
Like they want out. And sometimes they really need another 5 years. Or to understand that your Social Security benefit's just not going to hit that maximum number you're hoping for.
Well, not only that, but what keeps them from jumping a lot of times is there's not a retirement health plan.
Right, the golden handcuffs, the non-deferred comp plans, and there's not health plans.
Not a health plan, having to wait to 65 for Medicare, and looking at the options on an individual basis can be even more depressing than
Medicare,
than a rough time at the office.
Exactly. So it's like maybe you could find something else, and but it's all these. It's so interesting. I think the research shows, and I can't remember if it's Stanford or MIT, but they both have age labs, and they study longevity. Stanford has the Center for Longevity, and MIT has the Age Lab. These are phenomenal research institutions, and they do great things thinking about retirement and retirement of the future. And somewhere in there was a study done that said it doesn't matter when you turn age 50. It's not like there's a switch that goes off in your head. Oh my gosh, now I'm 50. What do I do? I beg to differ. I know they're smarter than I am, Rob, but by golly, at 50, I put on my birthday crown. I got a special sparkly tiara with my big 50 on it. And we went to a fancy restaurant in the north end of Boston, and my kids were there and some others. And a switch. I mean, it's like, oh my God, how did I get to 50? And it's my younger daughter, she's such a smart aleck. She said to me, well, you know, Mom, now you're halfway to 100.
Nice.
Gee, thanks, Lindsay. I wasn't thinking that, but I was thinking, oh my God, I only have 15 years till Medicare. I don't know why that popped in my head. I'm sure it has something to do with what I do for a living.
Yeah, sure.
But all of a sudden, what you started at 25 to 65 is 40 years, right? If I did that math right.
Yeah.
You had 40 years, you're down to 15.
Yeah,
At
it's
55,
getting
you're
real.
down to 10. It really is.
It's getting real.
So there is absolutely a snap that goes off in your head, and you change how you think. So it's a wonderful journey. You know, I wouldn't trade it for the world, but we have to get smarter, and we have to deal with what we have. And we have Social Security, and we have Medicare, and we have the ACA exchanges if you're in between. You know, so there are things we have, but I'll tell you, I spend, 20 hours a week on this stuff. And in every one of those 20 hours, I'm learning something new.
Well, I'm sure that you're the expert's expert. There's no question. So, like, if I have a really complicated scenario, I mean, you're who me is supposedly the expert on retirement planning goes to on these specific issues.
Yeah.
For those who are listening out here, can you kind of provide us with some of your contact information in case somebody wants to talk to you and has one of those off the wall scenarios?
Yeah, because I love those.
Okay.
Sometimes they become articles when I write for Think Advisor, Life and Health, but no names, of course. But there's fascinating scenarios. But yeah, I write a blog. I've been writing a blog for about, I think it's almost 15 years now.
Oh, great.
Called boomerretirementbriefs.com. And there I explore this idea of reimagining retirement and reinventing and what boomers are doing, because we're kind of leading the charge. We're the new pioneers of whether we love the word retirement or not, we're reinventing what these years after 60 are going to be. And there's some just remarkable people in there. Plus I write a lot about Social Security and Medicare and RMDs and some of the technical stuff, hopefully in more approachable language. So boomerretirementbriefs.com. My business is Mantell Retirement Consulting. And so I have a website out there for that. And I'm on LinkedIn, but Twitter is my favorite. So at Marcia Mantell.
Okay.
I love Twitter.
So at Marcia Mantell.
Yes, and it's Marcia.
Okay.
Yes, for Marcia. Yeah.
So we'll put that in the show notes.
Oh, thanks.
Okay. And this was great. Thanks so much, because you've got to catch a plane here in a second.
Oh, in a little while, yeah.
So I just barely caught you.
I know. I was so delighted that you invited me. It was so nice of you, and I didn't want to miss the opportunity.
Yeah. Well,
no,
thanks
this was
so much.
Great.
Thanks so much for doing this. And for those of y'all listening out there, we really appreciate y'all. We're trying to bring you content that helps you plan ahead for, we talked about Plan B, got to plan for that, but also for it's so exciting to be able to make some of these transitions and do it successfully. But it just takes planning. And it takes understanding some of these things, but that's okay. You've got people that can help you with that. Hopefully we're bringing you some of those resources. Again, we really appreciate y'all. Every other week we put this out. If you enjoy it, subscribe to it, tell your friends, and everybody have a great week. Take care.